Hello everyone, welcome to Brilliant Bankers. In today's session, we'll be discussing about AML KYC, and this will be the second part of the video of AML KYC. We have already discussed about the stages and the techniques that are used in money laundering, the impacts they have on the banks, how structuring and layering is being done, what are the preventive legislations that has been taken, and also what has been done with the help of international cooperation. All these have been discussed in the previous session as well. So now we'll be starting off with what India is doing against money laundering. So the AML regulations in India, these were established and are a comprehensive regulatory framework to combat money laundering and the financing of terrorism, which aligns itself with the international standards. The cornerstone of this framework is the PMLA Act of 2002, that is the Prevention of Money Laundering Act 2002, along with several supporting rules and guidelines that have been amended over the years, wherein key AML regulations and laws in India. The Prevention of Money Laundering Act, which is the primary legislation aimed at preventing money laundering, combating the terrorist financing, and ensuring that the laundered assets can be confiscated. It also provides for criminal prosecution of offenders, those are involved in the money laundering. What are the criminal offenses? Under the PMLA Act, money laundering is a criminal offense. Anyone found directly or indirectly attempting to project the proceeds of crime as untainted property is liable for punishment. So what are the powers to attach and confiscate? Who is having the powers to attach and confiscate? The ED, or the Enforcement Directorate, is the agency that is responsible for investigating the money laundering cases and has the power to attach all the properties that are believed to be proceeds of crime, and it is also later confiscated if proven to be a laundered asset. The next thing is the Know Your Customer Guidelines, which is issued by the Reserve Bank of India, mainly for the banks, the SEBI, the Securities and Exchange Board of India, and IRDAI, that is the Insurance Regulatory and Development Authority of India. These guidelines require financial institutions to verify the identity of their clients and the nature of their businesses, which ensures the financial system is not misused for illicit activities such as money laundering. These KYC norms apply to all customers and involve verification of identity proof, address proof, and the purpose of the relationship with the financial institution. What is the Black Money and Imposition of Tax Act 2015? That is the Undisclosed Foreign Income and Assets. This act aims to curb the practice of concealing foreign income and assets to avoid taxes, which is often a technique that is used in money laundering. It imposes penalties and rigorous punishment for those found guilty of concealing the foreign assets or the incomes. The Fugitive Economic Offenders Act of 2018. This law was introduced to prevent the economic offenders who flee the country to escape the law. It allows for confiscation of the assets of the individuals who are declared as fugitive economic offenders, such as in the high-profile cases like Vijay Mallya and Nirav Modi. The Foreign Exchange Management Act, the FEMA, of 1999. FEMA regulates the cross-border financial transactions and violations that can often be linked with the money laundering activities. The ED investigates the FEMA violations, particularly in case where illicit money is transferred abroad through the Hawala route or through other illegal means. The Benami Transactions Act, or the Benami Transactions Prohibition Act of 1988. This prohibits holding property in a fictitious name or under any other person's name. Money launderers often use the Benami properties to conceal the real ownership of the assets. What is the role of the Financial Intelligence Unit? It plays a pivotal role in India's AML regime. It was established in 2004 and it functions as an independent agency under the Department of Revenue, the Ministry of Finance. So FIU serves as a national center for the recipe and analysis and also the dissemination of financial intelligence to counter money laundering, terrorism financing, and other related financial crimes. So what are key functions of the FIU-INT? That is the receipt of financial information. So FIU-INT receives the financial information from reporting entities such as the banks, the financial institutions, and intermediaries. They are mandated under the PMLA to provide various reports related to the financial transactions, like the STRs, the suspicious transaction reports. These transactions are suspected of being linked to money laundering or criminal activities. The CTRs, the cash transaction reports, whenever there is a large cash transaction exceeding the prescribed threshold limit, which is normally rupees 10 lakh or more, whenever there is a transaction of more than 10 lakh in a single installment or a multiple installment within a period of 15 days, it is to be reported. The counterfeit currency reports, instances where the counterfeit currencies are being detected, the cross-border wire transfer reports, reporting of wire transfers from one or to more foreign countries above the certain threshold is also to be reported to the FIU-IND. And the next function comes in as the analysis of the financial information. The FIU-IND analyzes the financial intelligence received and applies various analytical tools to identify the patterns, trends, and the suspicious activities. The strategic and tactical analysis of the data helps identify suspicious individuals, entities, and their transactions. How do they disseminate this information? FIU-IND shares actionable intelligence with the law enforcement agencies like the ED, the CBI, and the Income Tax Department. Also to the regulatory authorities like the RBI and SEBI, and finally to the international organizations to assist in investigations and prosecutions related to the money laundering, tax evasion, and also terrorism financing. As we have discussed earlier, this helps in the international cooperation also. And then finally, it comes to public awareness and capacity building. FIU-IND brings in a lot of things, like it also contributes to raising awareness about money laundering and financing of terrorism among reporting entities and the public. It organizes training programs and workshops to build the capacity of law enforcement, regulatory bodies, and financial institutions in detecting and reporting the suspicious transactions. Impact of the FIU-IND and the AML regulations. Increased reporting and prosecution has brought into the problems or the betterment in STRs and CTRs that are being filed with the banks and the financial institutions. High-profile cases. The FIU-IND's intelligence have been instrumental in several high-profile investigations. For example, it played a key role in tracking the financial irregularities in cases involving the Nirav Modi, Vijay Mallya, and the 2G Spectrum scam. It reports that leads to the identification and freezing of laundered assets worth of billions of dollars. It has also increased the international cooperation with other countries. So what is a Basel Committee? The Basel Committee on Banking Supervision, the BCBS, is an international body that sets standards for banking regulations, focusing on strengthening of the regulation, supervision, and the risk management within the global banking sector. So one of its main significant framework is the core principle for effective banking supervision, which outlines fundamental guidelines for the banking sector to ensure the safety and soundness of the banks, thereby promoting financial stability. So coming to the overview of the Basel Committee's core principles, this committee's core principles for effective banking supervision consists of 29 principles. And these principles are also organized into two groups. That is the preconditions for effective banking supervision and the principles of supervision. So what are the preconditions for effective banking supervision? These include an effective legal framework, sound governance, robust accounting standards, and an independent judiciary in all banking system. Coming to the principles of supervision, these encompasses the structure, the practices, and the processes of banking supervisions. These principles are also designed to ensure that banks operate safely and soundly. They also mitigate the risk of failure in the banking system and also protect depositors and the financial system on a whole. So what are the key recommendations for the banks from the Basel Committee regarding to AML compliance? Several of the core principles focus directly or indirectly on the AML and the CFT, that is the anti-money laundering and the countering of terrorism financing, or the countering the financing of terrorism. That's called CFT. So the main key principles are responsibilities, objectives, and power. The number one principle is responsibilities, objectives, and power, wherein supervisors must have a clear and publicly stated mandate, which includes the responsibility to ensure compliance with the AML CFT regulations. This means that the national banking supervisors, like the Reserve Bank, are responsible for ensuring that banks implement adequate policies, procedures, and controls to prevent money laundering. Coming to the second principle, which is of utmost importance is a supervisory approach. This principle emphasizes a risk-based approach to supervision, which is critical for AML compliance. It requires the banking supervisors to access or assess the risk profiles of the banks, including the risk of money laundering and terrorist financing. Banks that operate in high risk areas or offer products susceptible to misuse must be subjected to closer scrutiny and more robust supervisory guidelines and measures. Coming to the other points, supervisory techniques and tools that have to be used. All these central banks, or as in the condition of India, the Reserve Bank, they should use variety of tools to access the bank's risk and compliances that they are taking with the regulations and including the AML requirements. These tools include on-site inspections, off-site monitoring, and risk assessments as well. All are designed to identify the weaknesses in the AML controls. Coming to the fourth principle of supervisory reporting, bank must report all financial information to their supervisors, that is, including the suspicious transactions that may indicate money laundering or terrorist financing activities. Supervisors should ensure that banks maintain accurate records and report suspicious activities in a timely manner, wherein all regulations are being put up by Reserve Bank of India in the case of AML KYC. Coming to the main fifth principle, that is the internal control and audit. Banks must have an adequate system of internal controls, which includes the policies and procedures to comply with the AML and CFT obligations. The internal audit function should regularly review these controls and report any deficiencies that are ongoing. And the supervisors must ensure that the banks have effective internal controls, especially for AML compliance, which can detect and prevent these suspicious activities. Coming to the sixth principle, that is the abuse of financial services. This principle directly targets the AML safety compliances. It requires the banking supervisors to ensure that the banks have policies and processes in place to prevent and report the abuse of their services for money laundering and the terrorist financing activities. Banks must have effective CDD, the customer due diligence, KYC, the know your customer procedures, and systems for detecting these suspicious activities. So, what are the focus on AML compliance in the Basel framework? The Basel core principle emphasizes the importance of strong supervision and internal controls to prevent money laundering and terrorist financing. The key aspects of the AML compliance within this framework reads like risk-based approach, wherein banks are required to adopt a risk-based approach to AML CFT guidelines. This involves identifying, assessing, and understanding the risk that are posed by different type of customers, the products, services, and the regions they are operating. Banks must then apply appropriate controls based on the level of the risk of the region, the customer, or the services that they are providing. Coming to CDD, or the customer due diligence. Financial institutions are expected to conduct thorough customer due diligence processes to identify and verify the identities of their customers. This is crucial for detecting and preventing money laundering activities, where enhanced due diligence is also to be required to be conducted for higher risk customers. Coming to the point of the transaction monitoring and reporting, banks must have a robust system for monitoring transactions to identify suspicious activities such as unusual patterns in the case of deposits, withdrawals, or transfers also. So STRs must be reported to the relevant authorities promptly. And finally comes the compliance function and then the training and awareness. In the case of the compliance function, banks are required to establish a dedicated AML compliance function, including a compliance officer who is responsible for ensuring that the institution adheres to the AML laws and regulations. When we talk about the training and awareness, banks must ensure that their employees are adequately trained in AML laws and regulations, including how to identify and report these suspicious activities. Training is also to be updated, or training should be updated regularly to reflect new trends and techniques that are being used in money laundering process. When talking about the internal audit, regular audits should be conducted to ensure that AML policies and controls are very effective. The audit process should cover all aspects of the bank's AML programs, ensure that weaknesses are identified and addressed in each and every audit so that the risk factor of the banks are in a lower level. Coming to the Prevention of Money Laundering Act 2002, that is the PMLA Act 2002. It is India's primary legislation that is aimed at preventing money laundering and ensuring that the individuals involved in illicit financial activities they face legal consequences. This PMLA Act serves as a deterrent by targeting the various stages of money laundering and providing authorities with the tools to trace, attach, and confiscate the proceeds of crime. So, coming to the main point, what does it do? It provides the criminalization of money laundering, and it also provides a comprehensive definition of what proceeds of crimes. It also gives the power to attach, seize, and confiscate the property that has been originated through money laundering. So, coming to the objectives, it is to prevent and combat money laundering, to seize and confiscate the proceeds of crime, to cooperate with the international law enforcement agencies. So, how does the PMLA aim to deter and disrupt the money laundering activity by criminalization of money laundering? The PMLA makes money laundering a criminal offense, which is central to its deterrent effect. It defines money laundering as an act where a person attempts to conceal, possess, acquire, use, or project the proceeds of crime as untainted property. So, this criminalization covers all activities that involve the process of funds derived from the criminal activities known as predicate offenses. So, what is predicate offense? These are offenses that generate the illegal proceeds that are later laundered into the market. Thus, the PMLA provides a comprehensive list of offenses, including those under laws with the Indian Penal Code, the Narcotics Act, the Psychotropic Substances Act 1985, and the Prevention of Corruption Act, the PCA Act. Coming to comprehensive definition of the proceeds of crime. In this, the PMLA has a broad definition of proceeds of crime, which refers to property derived from any criminal activity that is connected to the predicate offenses, which includes movable or immovable property, tangible or intangible assets, direct or indirect profits from illegal activities. So, by targeting the proceeds, the law prevents criminals from enjoying the fruits of their illegal activities, which is key to deterring money laundering. So, powers of attachment, seizure, and confiscation. One of the strongest tools under the PMLA is the ability of enforcement agencies, especially the ED or the Enforcement Directorate, to attach, seize, and confiscate assets suspected or being involved in money laundering. Coming to the provisional attachment, these authorities can provisionally attach properties believed to be involved in money laundering for 180 days to prevent their sale or transfer. In the case of seizure of property, if it is proven in the court the property is the proceeds of crime, the property is seized and can be confiscated by the government also. So, for confiscation, once a government order is passed, assets involved in laundering activities can be permanently confiscated, effectively disrupting the financial base of the criminal enterprises. This process ensures that the criminals do not benefit from illegal gains or illicit gains and reduce their financial influences in the market. Deterrent punishments. The PMLA also provides harsh penalties for money laundering offenses, serving as a significant deterrent to individuals considering engaging in such activities. In the case of imprisonment, offenders can be sentenced to rigorous imprisonment for a period ranging from 3 to 7 years. If the offense involves proceeds from narcotics related crimes, the imprisonment can also extend up to 10 years. What are the obligations of the reporting entities in the case of PMLA? The PMLA places significant compliance obligations on financial institutions, banks, intermediaries, and other reporting entities. These entities are required to maintain records of all transactions, let it be both domestic and international, for a specified period. They have to conduct the CDDs, the Customer Due Diligence, which includes the KYC checks to ensure that they are not dealing with individuals involved in illegal transactions. They have to maintain the file reports on suspicious transactions, cash transactions, and the cross-border wire transfers with the Financial Intelligence Unit of India. And the failure to comply with these requirements can lead to fines and penalties, ensuring that the financial sector remains vigilant in detecting and reporting all these activities. The role of the Enforcement Directorate. The Enforcement Directorate is a key agency responsible for investigating money laundering cases under the PMLA. It works in coordination with the national and international bodies to track illicit financial activities. The investigative powers. The ED has an authority to summon individuals search their premises, and also seize their documents. It can also conduct searches and raids to gather evidences related to money laundering. They have a very good international cooperation as well. The ED collaborates with law enforcement agencies around the world to trace and confiscate assets held in foreign jurisdictions. This ensures that the criminals cannot evade justice by moving assets abroad also, deterring the transnational money laundering system. India is a signatory to various international conventions and actively participates in international AML bodies like the FATF, the Financial Action Task Force, and the Eggman Group. The PMLA incorporates provisions for extradition of offenders who are involved in money laundering, ensuring that offenders cannot escape justice by fleeing to other countries. The cross border information exchange for the purpose of tracing and confiscating proceeds of crime in foreign jurisdictions also. Coming to freezing of bank accounts, under the PMLA, the ED has the authority to freeze the bank accounts of individuals suspected of being involved in money laundering activities. This immediate freezing of the accounts ensures that the movement of illicit funds is halted and the criminals are deprived of the ability to use or transfer these proceeds. Coming to coordination with other enforcement agencies, the PMLA provides for coordination between the ED and the other agencies, such as the CBI, the IT department, and the state police forces, to ensure a multi agency approach to tackling money laundering. This enhances the overall capability of the government to disrupt criminal networks. Use of technology and financial intelligence. This law also encourages the use of advanced technology, the big data analysis, and the financial intelligence to monitor suspicious financial activities by analyzing transaction patterns and using automated systems. The government can detect and prevent money laundering actively and more efficiently by using all these things or by the help of the PMLA Act 2002. We can also say that the PMLA is designed to disrupt and dismantle the money laundering networks by criminalizing the act, empowering agencies with investigative and confiscation powers, and also holding the financial institutions accountable for their roles in preventing the illicit financial flows. So, through several penalties, cooperations with international bodies, and strict monitoring of the financial transactions, the PMLA ensures that criminals face both financial and legal consequences, ultimately deterring and disrupting the laundering of illicit products. We can also discuss about the seizure and attachment of the property in detail, wherein the PMLA grants the enforcement directorate the authority to seize and attach the assets, which was discussed earlier. For discussing about the asset recovery or the seizure of the property. In the case of asset recovery, one of PMLA's core objectives is to recover and confiscate the assets acquired through illegal means. By confiscating these assets, the law ensures the criminals are not able to profit from their illicit activities, making money laundering a less attractive avenue for organized crime groups. Handling of assets of fugitive economic offenders. In cases where the accused flee the country, the Fugitive Economic Offenders Act 2018 comes into play, which complements the PMLA. It allows the confiscation of properties owned by fugitive economic offenders who often move abroad to escape the prosecution, and also provisioning of for non-repatriated offenders. Under this law, the individuals declared as fugitive economic offenders have their properties in India attached and confiscated, even if they have not returned to face trial. This further reinforces the PMLA's ability to deter money laundering and the economic crimes. So, what are the importance of international cooperation in the PMLA's objectives? Given the global nature of money laundering, international cooperation is crucial to the effectiveness of the PMLA Act. Money launderers often use complex cross-border systems to move illicit proceeds, making it essential for countries to work together to track, seize, and confiscate these assets. The transnational nature of money laundering. Money laundering schemes often involve moving funds across borders to obscure their illegal origins. Criminals may route the funds through offshore activities or offshore accounts, the shell companies, and financial institutions in multiple countries to evade detection. Therefore, no single country can effectively combat money laundering without international cooperation. What are the international cooperation mechanisms? The PMLA explicitly provides the cross-border cooperation with foreign governments and international organizations to facilitate the tracking and confiscation of assets that may have been moved outside of India. So these cooperation mechanisms include mutual legal assistance treaties, the MLATs. India has signed the MLATs with several countries to facilitate legal cooperation in criminal matters, that is, including money laundering cases. These treaties allow countries to exchange information, conduct joint investigations, and assist in freezing the assets located in foreign jurisdictions. The FATF, as discussed earlier, the Financial Action Task Force, wherein India is a member, which is an international organization that is dedicated to combat money laundering and terrorist financing. As part of its commitment to FATF, India aligns its laws, including the PMLA, with international standards and cooperates with other FATF members to detect and disrupt the cross border money laundering activities. Coming to extradition of offenders. With the help of successful international collaborations, India has several successful collaborations in tackling the money laundering cases. We are still on the process of extradition of offenders, wherein the extradition is also a very important key aspect of international cooperation. The law allows for the extradition of individuals involved in money laundering who flee to foreign countries to escape prosecution. India has signed multiple treaties with multiple countries, ensuring that fugitive criminals or the people involved in fugitive crimes, in laundering crimes, can be brought back to face justice. For instance, extradition efforts were successful in case like that of a Christian Michael, a middleman in the Augusta Westland VVIP chopper deal, where international cooperation facilitated his return to India to face trial for corruption and money laundering. So, thus, the PMLA's provision for seizing and confiscating assets aim to dismantle the financial networks supporting criminal activities by removing access to illicit proceeds. The law's effectiveness is further bolstered by international cooperation, which is crucial in addressing the global and transnational nature of money laundering. So, by collaborating with other countries and international organizations, India can pursue laundered assets beyond its borders and ensure that the criminals do not find safe havens abroad. This synergy between the domestic enforcement and international collaboration is the key or is central to the success of the PMLA's objectives. So, with that, we come to the end of today's session. If you do have any questions, please do update them in the comment section, for which we are here gladly to reply to your answers. Do not forget to like, share, and subscribe this video. Also, do consider subscribing the Brilliant Bankers channel. Jai Hind. This is Nishan signing off. We will meet in the next video.